Markets outlook. Obviously, we'll just start off with the summary and then we'll go into the calendar. What we're looking at main news events this week, which is quite a lot to be fair. We've got, I believe, 4 or 5 central bank decisions. So, yeah, we'll go through that and then we'll go into the specific macro currencies and then we will look at technicals at the end. So, yeah. Starting off, markets last week saw equities close back above all-time highs on the Friday close due to many factors, one of which being investors now rotating back to AI and growth themes, which removes the safe haven demand for the dollar. And US oil closing above the $90 handle showed that the markets have priced in some risk premium ahead of the US and Iranian talks, which actually got cancelled on the weekend. They got cancelled over the weekend during the market close. Last week, bonds also crept up, which aligned with the same narrative we reached from US oils movements. Similarly to last week as well, the market open is going to be just as key, as well as the first London session, because it's going to kind of tell us where the big investment banks, the funds, the institutions, how they're adjusting their positioning for the week ahead. Unlike last week where we saw the gap higher in US oil and the dollar get retraced by the first London session, if we gap above $100 per barrel on US oil, I'll take that as the market being extremely pessimistic and will most likely pivot to the escalation narrative. Bear in mind, I'm filming this on the Monday after we saw the open, and essentially that's what happened. That's not what happened. We basically oil had a tiny gap, the dollar had a tiny gap, and equities had a tiny gap, which has all been retraced. So essentially, we're looking at the de-escalation narrative for the week ahead, which is for now, we've got Trump's holding a national security meeting tonight, which is going to obviously impact what the markets, depending on what he says. But until then, we are definitely more risk on. So yeah, let's go into the calendar and let's just look at the main events we have this week, which, to be fair, is quite a lot. Today, we have Japanese headline unemployment. That's basically the only thing I'm really paying attention to. Tomorrow, we have the Bank of Japan's rate decision. And that's basically Monday and Tuesday sorted. Wednesday, we have CPI from both Australia and New Zealand, I believe. Or is New Zealand tomorrow, Thursday? We'll get to New Zealand. But, we basically have CPI coming out of Australia. And that's kind of it. We also have the Bank of Canada and the Fed rate decisions on Wednesday. So a very busy day for central banks for sure. Thursday, we then have the Bank of England rate decision, which was obviously going to be key. Markets are kind of pricing in a more hawkish Bank of England at the moment, just due to last week's decent data and obviously at very elevated energy prices. Then coming to Friday, we basically only have retail sales coming out of Switzerland, which is kind of irrelevant. As we know, rate differentials aren't always the primary driver of the Swiss franc. But yeah, that's basically what we are looking at next week events-wise, or should I say this week event-wise. So yeah, going into the currencies. Okay, starting off with the US dollar. Pretty simple. It was all dependent on the open and first London session, which we are seeing right now as being very, very risk on and de-escalate, and markets moving ahead with the de-escalation narrative. We saw the dollar gain some ground last week, however with not much momentum, and unless the markets react very negatively to the negotiations folding over the weekend, we should remain on a downwards trajectory, which is what we are seeing. Not to mention equities making all-time highs, which could indicate that markets either front-ran the narrative of negotiations going very well, or they understand that this is just another stage towards the bumpy ride of de-escalation. This also removes the safe haven demand for the dollar due to the market stress diminishing and flows rotating out of safety assets into risk assets, as we mentioned at the start. Therefore, due to the gap, we're going to remain risk on for this week until a new headline comes out and something changes, where we see outperformance of the Australian dollar, New Zealand dollar, GBP, and then we're going to see the dollar take a big hit. The main data point next week for the US is just going to be the Fed decision. That's kind of where all the eyes are at, and then obviously developments that come out of the Middle East. Also, we'll just go through the new terminal style real quick. Basically, you can see insights here. live news coming here from only dollar linked. We then have CFTC positioning down here. So leveraged funds are negative on the dollar. Asset managers are positive. However, this is extremely neutral to me. So yeah, and makes sense because it could go either way. But yeah, that's essentially where we are at on the dollar. Moving on to the pound. We are bullish on the pound this week. Pretty simple. The data last week surprised to the upside. The labour market showed signs of improvement and inflation stayed relatively sticky. But the main driver of the pound's outperformance last week was without a doubt the risk on flows derived from equities having a massive push higher. And as we've just seen, equities have had a slight gap, but they've already retraced it. And the flows into equities remain to the upside. We're then going to, of course, see pound appreciation against currencies like the Swiss franc, the yen, the dollar. Not to mention the current creeping up in the US oil prices, or just elevated in general oil prices, is going to continue to support the front end of UK gilts, supporting the hawkish repricing. We have the Bank of England this week, and as we mentioned, we can expect to have a hawkish tilt just due to the elevated energy prices, bringing in the inflation concerns, as we saw last week with RPI, I believe, on Wednesday, came in like 30 basis points higher than consensus. So yeah, bullish on the pound next week. Moving on to the euro. For the euro, we are bullish, but dependent on the cross. So yeah, the euro remains largely cross-dependent. While it benefits less from declining oil prices, is also less exposed than the pound to energy shocks, which is suggesting relative resilience in a re-escalation scenario, which we're not getting. So we are expecting continued downside in the euro-pound cross. So yeah, vice versa, if we pivot to the escalation narrative, the euro shall outperform the pound, the Swiss franc, the yen due to rate dynamics. Positioning wise, Euro GBP stands out as a clean expression of this divergence. And then obviously, because we're looking at the more risk on narrative right now, shorts in Euro AUD, Euro NZD are quite nice. And obviously, if US oil starts to drift lower and equities continue to pump higher, the AUD and New Zealand dollar are going to be the go-to for upside moves, as we'll get into. So yeah, bullish on the euro, but entirely dependent on the cross. Now the CAD. We are bullish on the CAD. It's in a very interesting scenario, the CAD, because US oil prices are elevated, which is great for Canada's trade balance and revenue coming into the country, which is obviously going to support the Canadian dollar, as we've seen. But we also have equities pushing higher, supporting risk on assets like the CAD. So, and then similarly, the front end of the curve in Canada is also relatively elevated due to the energy prices. Obviously, that's quite common across all of G8. But it means we now have the sentiment pivot supporting the CAD. We have rate dynamics supporting the CAD. And US oil being elevated is supporting the CAD. So obviously, the best currencies to pair this up against is going to be the likes of the Swiss franc, the dollar. And yeah, the main data point this week for the CAD is going to be the Bank of Canada rate decision, and then obviously any forward guidance we get from that. So yeah, that's essentially what we're looking at on the CAD. Moving into the Australian dollar. The Australian dollar and New Zealand dollar, obviously we do them together. The Antipodeans were clear beneficiaries of last week's risk-on environment, supported by equities push higher, China-linked flows, and carry dynamics, as we've mentioned. We're looking at the same playbook this week, with equities reflecting sentiments. Also a bunch of other stuff, obviously the investment into the AI growth themes, the CTA inflows. So yeah, those kind of things is all pointing to equities higher. And as we mentioned, equities higher, risk sentiment higher, dollar lower, stronger China. This is all pointing to further outperformance of the Australian dollar and New Zealand dollar. And as we've seen from the open, equities in the VIX is going to be key in determining the direction of these currencies, and at the moment it's pointing to the upside. Main data points this week for Australia and New Zealand is going to be the CPI data. That's basically it this week. Inflation rate month over month and year over year, which we get on Wednesday. So yeah, that is essentially what we are looking at with these currencies. Moving on to the yen. So, the yen. we remain bearish on the yen, but we are very cautious, as we will go over. So yeah, rate differentials are moving against the yen for now, and this week's Bank of Japan meeting shouldn't change the theme that we're expecting a neutral to hawkish Bank of Japan. US oil creeping up is going to hit the Japanese economy. Similarly to Europe, they import 80% of their energy, so obviously these elevated energy prices are going to hit them quite hard. However, the front end of the curve is reacting very differently in comparison to Europe. So obviously in Europe, we're seeing the front end of the curve have a massive hawkish repricing due to these energy prices. However, in Japan, we are not seeing that. The curve's pretty flat, and yeah, so it's basically a clear divergence there is euro-yen upside. So US oil's movements, risk on flows, and the front end of the curve are all pointing the yen lower. Not to mention all the domestic issues politically inside the country with the new PM. But as always, with UJ hovering around the 160 handle, we need to be very careful of intervention because they can flick the switch and within a minute's notice you can get wiped out by the intervention. So yeah, I mean, if we just come down here and look at what the CFTC positioning is, it's overwhelmingly bearish. Leveraged funds are super bearish. Asset managers are bearish. So yeah, everything is looking to the downside for the yen, at least for now. Moving on to the Swiss franc. So the Swiss franc, we remain neutral to bearish on the Swiss franc. They're in a very poor position for the week ahead. Obviously, gold is struggling with yields remaining elevated and the dollar catching a bid amid the slow rise in US oil. Risk on flows, dominating markets, are also going to reduce the safe haven demand for the franc and gold. However, this is all dependent on the cross. If we continue to see de-escalation, which we are seeing, Euro Swiss, G Swiss, and AD Swiss upside are all great ways to express this idea, and vice versa. So yeah, that is essentially where we are at. I mean, if we just look at the CFTC positioning here, leveraged funds, bearish. Asset managers, extremely bearish. So yeah, and I mean, the SMB are not going to shy away from a weaker currency. That's obviously what they want right now because their currency is so strong. So yeah, this week we are looking at Swiss franc weakness. Moving on to the technicals. So if we look at what's happening with the dollar right now, we're clearly moving to the downside. The market is pricing in the de-escalation narrative, and until something changes, we can expect this to continue. Massive gap off the open. Well, I don't know if that was a TVC error, but yeah, downside makes total sense for now at least. Moving on to AUD NZD. I've got two levels in mind for a bounce. This level here, which we are approaching, 1215, and then this massive level down here. I really like this level here, 12125. AU, similar. This level down here is quite nice. I like the look of this. However, are we going to get there? Probably not. We're quite extended. AD Swiss, exact same playbook here. This whole level here to me is just screaming for a bounce. Euro AUD, I like this level up here. We caught a nice position on the 1 hour last week where we got in at this position here. Ran for a 1 to 4, I believe. Yep, ran for a 1 to 4. This level here is what I'm looking at for this week. Euro pound, I think this level here is looking quite nice. If we go on the 4 hour, I just think it's a very key level. If we're gonna go, we're gonna go from here. Otherwise, we're gonna have to see, for me at least, a big change in the headlines to break above this level here and kind of switch the narrative on its head. So yeah, that's what we're looking at on Euro pound. Euro yen, obviously we are looking for upside. It kind of filled us at the gap, at the open, sorry. I wanted to get in around this handle. Something around here. I wanted to get in at the 1865. However, obviously 9 PM open, did not get in. Euro NZD, this level is very nice up here. Euro dollar, we came in on the Thursday and got a nice reaction off this level here. I'm expecting to continue to play it to the upside. GU, exact same thing happened here on the open. We came into this lovely gap and we moved higher. NU, similar thing here. This level was quite nice, to be fair. The one made here during 5 AM on the Monday. So yeah, I mean, just looking at the markets now, you can clearly tell what the big funds are positioning for. They're moving their assets all in favour of risk. Dollar Swiss, similar thing happened at market open. This level here, we had a lovely rejection. NZD Swiss, I like this level here, maybe somewhere around the 4615. NJ, same thing, just got to be careful. Because, I mean, if we just get up dollar yen, you can clearly tell when there's been clear manipulation. Clear manipulation here, clear manipulation here, clear manipulation here, clear manipulation here. We're obviously lining up for more clear manipulation. And it's because we are hovering around this 160 handle. So yeah, as soon as you get to the 160 handle on dollar yen, just leave it. Do not even go near it. But yeah, anyway, back to where we were. I think we were on dollar CAD. Dollar CAD's had a massive push down on this open. So yeah, a pullback's going to be tough to get into. GJ, this level here makes sense. I've got an alert, but obviously, as I've just mentioned, all my eyes are on UJ to see if we do get some big intervention. G Swiss, this is a lot cleaner. I feel like this is a lovely position here. Euro Swiss, same playbook, looking to get in there. CAD Swiss, probably around the 575. Yeah. And then that is it for this week. I mean, equities are pumping. Still pumping. I mean, if we just go on the weekly, I mean, it doesn't look like a war's happening, does it? And this kind of tells you how markets are pricing. So yeah, this is the outlook for the week ahead, or the current week. And yeah, as always, drop a comment if you've got any questions. Check out the website. There's always a 50% discount for your first month in the description. And yeah, I'll catch you in the next week's outlook.